If you are on Social Security or disability benefits, listen up. The estimate for the 2026 cost of living adjustment, otherwise known as COLA, is out, and it is not what we expected, especially since the cost of living adjustment for this year was only 2.5%. But let's dig in. According to the news that is breaking, Social Security cost of living increase for 2026 is projected to be the lowest in a long time. Why is that the case? I am going to dig in and, most importantly, let you know how this affects your Social Security and disability benefits. Now, let's look at COLA for the last few years. If you remember, during COVID, it was 5.9% in 2022, 8.7%, which was one of the highest in a long time, actually in about 20 years. And then it fell to 3.2% in 2024. While this year, cost of living adjustment was 2.5%, and a lot of seniors were hoping for an increase in 2026 based on all the cost increases that seniors have been experiencing, both in food, transportation, housing, healthcare, prescription drugs, etc. And now we're hearing that COLA is actually even going to be lower than it was this year. So I have done the research. I am going to bring you the facts behind the headlines, no politics, just the straight facts and how it affects your benefits. I am Kwame Kwade. I am an entrepreneur and personal finance expert. I've been helping seniors get the benefits they deserve for 15 years. And I also teach finance to graduate students at one of the most prestigious universities in the country. Let's dive right in. So, experts predict that the 2026 cost of living adjustment will be 2.4%, the smallest since 2021's 1.3% band, and down from the 2.5% this year. This modest rise comes after a historic jump to 5.9% in 2022 and 8.7% in 2023, which helped offset the pandemic era inflation. More than 70 million Americans depend on Social Security, including retirees, disabled individuals, and families depend on the cost of living adjustment to maintain their standard of living. A lower COLA means less help against rising costs for all these groups. While inflation has cooled, according to the government, it is also still high because prices are still high in a lot of areas. So, what that means is that even though the rate of inflation is slowing down compared to the year before, prices that went up during COVID and post COVID never came back down. And so, seniors are still facing challenges. Many seniors report that even recent higher COLAs have not kept up with their real expenses. For for the average retiree, a 2.4% COLA means $48 a month increase, which can quickly be eaten up by higher bills and medical costs. Understanding what's behind these smaller increases is going to be helpful in planning for 2026. So I'm going to explain to you why it is 2.4%, how it's going to impact you, and what can be done about it. So, how is COLA calculated? Well, the Social Security Administration uses the Consumer Price Index for urban wage earners and clerical workers, which is otherwise called CPI-W, which tracks the spending of working age Americans. Here's the difference, and here's why this problem is going to continue. The wage index that is used is the Consumer Price Index for urban wage earners and clerical workers. So these are working age people, not retirees. So they are not tracking prices that affect retirees. They're tracking prices that affect working age people. So this index underweighs key senior expenses like healthcare and housing. Each year, the SSA compares the average CPI-W from the third quarter of the current year to the third quarter of the previous year. If there's an increase, then you get an increase in COLA. If there's no change, then there's no COLA at all. If prices went down, which rarely does, there's nothing they do because they cannot reduce your Social Security benefits because prices went down. So your Social Security increase can be go up, stay the same, but it can never go down. by law. Seniors typically spend more on healthcare, 15% of budget, and less on transportation and electronics, but the CPI-W only allocates 8% to healthcare. So immediately you can see there's a big gap between the CPI-W and the real cost that impacts seniors, because seniors are spending on average 15% of their money on healthcare, and the CPI-W only allocates 8% because they are tracking healthcare related expenses for working age Americans and not retirees. This mismatch means COLA often fails to reflect the true cost increase that seniors face. Many advocacy groups and lawmakers argue for switching to a senior focused index, which I agree with, like the CPIE. The E will stand for elderly, which better reflects retiree spending patterns. Until then, until they change to the CPIE, many will continue to lag behind real world inflation for older Americans. So until a change is made by Congress, you're going to continue to see a gap between what seniors are spending and the cost of increase that they are facing versus the COLA, the cost of living adjustment that they are receiving each year on Social Security and disability. Now, the Senior Citizens League, which released this report, this is the data that they are using. So they looked at the CPI-W yearly change. In February, it was 2.7%. March, it was 2.2%. So you can see inflation is trending down year over year, according to the government. And so based on that number, the um, Senior Citizens League is predicting that COLA, based on the February number, would have been 2.2%. Based on the March number will be 3%, 2.3%, and then based on the April number is going to be 3.4. So they are predicting what they are seeing because COLA is going to be announced in October, 5 months away. This is what they are predicting right now based on the data that they have seen. And so right now it's at 2.4%, but it could change. And so I'm going to keep updating you once they release updated monthly COLA predictions. But let's get into the weeds of it. Since 2000, COLA has averaged about 2.1% per year, while typical senior expenses have risen to 2.6 annually. So you can see there's still a gap. This gap has eroded the purchasing power of seniors over time. Now, seniors have lost 13,800 since 2000 on average. The average retiree has lost 13,800 in buying power. That's a lot. Over the past 20 years due to COLA not keeping up with actual inflation. This means seniors can afford less today than when they first started receiving Social Security or disability benefits. The large COLAs of 2022 and 2023 help offset pandemic era inflation, but were not enough to fully restore lost ground. As inflation moderates, smaller COLAs are returning, but prices remain high for essential goods. Even with a COLA, many seniors find their checks don't stretch that far, especially in areas like food, housing, healthcare, etc. Let me know what you think. Is this how you are experiencing COLA? Are you getting COLA and then realizing that it doesn't even stretch, or that your premiums for Medicare eats up your COLA, or that the increase that you're getting for the year is not enough to cover the expenses that you have? Let me know in the comments because I want to see what you guys are experiencing, because clearly, based on the data, seniors have lost $13,800 since 2000 because COLA has not kept up with inflation. So a 2.4% COLA would raise the average monthly check from 1,007 to 1,907 to 1,955, which is a very tiny increase. But here's the thing: Medicare Part B premiums are projected to rise by 6.6%. So think about it. Medicare Part B premium will go up by 6%, but then your cost of living adjustment is going to go up by only 2.4%. So medical inflation is one of the areas that seniors are being impacted greatly, and the consumer price index for the urban wage and clerical workers that they are using does not capture this. And so you're going to be paying more for your Medicare Part B premium while your Social Security COLA is going to be the tiniest it has been in a few years. This will be the smallest COLA since 2021 when it was 1.3% and well below the 5.9% and 8.7% the last few years. When adjusted for inflation, the 2026 COLA will leave seniors with about 4% less purchasing power than they did in 2020. A big, big gap. Food prices are up 5.1% this past year alone, and rent has climbed 4.2%, and healthcare costs have climbed 7%, all outpacing the projected COLA. This means Social Security checks cover less of seniors' daily needs. According to the Elder Economic Security Standard Index, a single renter needs $2,566 per month for basic living expenses, but the average Social Security check is only $1,955, or would be. Most seniors must dip into savings or go without essentials. So essentially, if you're only getting Social Security as your main source of income, already the deck is stacked against you, because if you need to rent a place, then you need $2,566 a year on average monthly to be able to cover your expenses. So think about it. A lot of seniors are struggling because of this gap, because even surveys show that if Social Security is your only source of income, you are not getting the right amount to be able to afford to pay rent, to pay utilities, your phone, all the essential before you get to food, transportation, healthcare, etc. Therefore, more than half of retirees now carry over $5,000 in credit card debt, often using credit card to pay for groceries, utilities, or medical bills. High interest rates make it impossible to escape this cycle. 1 in 3 seniors visit a food bank monthly, 1 in 3, and 33% spend more than half of their income on housing, leaving little for other essentials. A small COLA increase makes this situation much, much worse. So why does COLA lag behind real inflation? Well, the CPI-W, as I mentioned, allocates only 8% to healthcare, and seniors spend on average 15%. Seniors spend larger share of their income on housing, but the CPI-W does not fully capture rent and property tax increases. This leaves many retirees vulnerable as rent and taxes rise faster than benefits. And then there's transportation. The CPI-W gives more weight to transportation and electronics, which have slower price growth or even declines. Seniors, however, spend less on these items. And so measuring that and considering that as a factor to increase seniors' cost of living adjustment is just not adding up. Each year, the COLA falls short of actual inflation. The gap continues to grow. Now, there's been efforts, as I mentioned, to reform this. Senior advocates and lawmakers are proposing the CPIE, the Consumer Price Index for the elderly, which better reflects senior spending on healthcare and housing. This change could boost COLA by 0.2 to 0.3 percentage points. Bills like the Seniors COLA Act have been introduced in Congress to mandate the use of CPIE for Social Security adjustments. These proposals enjoy broad support from advocacy groups and many voters. Some policymakers suggest that using chain CPI, which will slow COLA growth even further and reduce Social Security long-term deficit, will even make things worse for seniors. It may be good for the Social Security Trust Fund, but it's not going to be good for seniors. A recent poll found that 68% of voters support switching to a senior-backed index to calculate cost of living adjustment. So the only thing standing in the way is political will. The Senior Citizens Tax Elimination Act will remove federal taxes on Social Security benefits. President Trump has also promised this, saving the average senior $3,000 per year. This will provide immediate relief for those struggling with rising costs. Some proposals will boost minimum Social Security payment to ensure no retiree falls below the poverty line, helping the most vulnerable seniors. This will essentially benefit those with low lifetime earnings. Another proposal is to expand SNAP, food stamps. Expanding eligibility and benefits for SNAP and housing assistance can help seniors cover basic needs when COLA falls short. Many eligible seniors do not currently apply for these programs, some because of stigma, because they are not aware they could get it, or they feel they're taking benefits away from somebody if they apply. And then the Inflation Reduction Act has a 2,000 annual cap for Medicare Part D in 2025, so it's helping save seniors on prescription drugs. Once you hit that 2,000 mark, then you don't have to pay any further. Here are some real stories of how seniors are coping. Many seniors report skipping meals daily or delaying her medical care or reducing medication doses to make ends meet with a shortfall in COLA. This can have serious health consequences over time. With fixed incomes not keeping up, more retirees rely on credit cards to pay for everyday expenses, leading to growing debt burdens. High interest rate is harder to recover from financially. And then some are returning to work. About 12% of seniors have returned to part-time work or gig jobs to supplement their Social Security income. This trend is expected to grow as COLA continues to decline. And then food banks, senior centers, and local charities are seeing increasing demand from older adults who can't cover the rising costs with Social Security alone. Community resources are becoming a lifeline for many seniors. So, what can you do? Stay informed. Watch channels like this as we keep you informed about the latest news, anything in and out of Congress that can affect your benefits. Advocate for change. Contact your representatives and support efforts to reform COLA and protect Social Security. Over 1.2 million petitions have been delivered to Congress in support of senior-focused reforms. Consider delaying Social Security claims to increase your monthly check. The longer you wait, the more benefits you get. Reviewing eligibility for SNAP and other assistance, and appeal property taxes if applicable or eligible. Every dollar you can save counts. And then review your spending. Look for ways to cut unnecessary expenses and seek out local resources for food, healthcare, and housing support. Proactive planning can help you weather years of low COLA increases. We are in the season of low COLA as the government say inflation has come down, and so you're going to continue to see COLA go down drastically. So let me know what you think. What do you think about the estimated COLA for 2026? I want to hear from you in the comment section below. If you like what you heard, please consider subscribing. We really appreciate your support. And our mission is to do the research, bring you the facts, no politics, just how these changes and future changes can affect your Social Security, disability, Medicare, Medicaid, and more. Now, if you are on Medicare, or are turning 65 and don't know what to do or are not sure what your options are, continue listening because I have great news for you. You may not know this, but the Trump administration sued a bunch of Medicare providers because they were trying to manipulate the system and they were taking advantage of seniors. That is why 90% of all seniors are in the wrong Medicare plan, because there's so many plans out there, 24,000 to name them, and trying to find the right Medicare plan for you, understanding the rules, the restrictions, the options, the cost, what coverage, what doctor network you need, it can be overwhelming. And picking the wrong plan can also cost you money and your health, because the worst thing is needing help and not having it. So what are we doing about it? We have partnered with an advocate, a Medicare advisory company that is on a mission to make Medicare simple for you to understand, choose the right plan, and use your Medicare to the full benefit advantage. So, what can Chapter do for you? Well, first, I want to tell you a story about one of their co-founders who watched his parents struggle to navigate the process of choosing a Medicare plan, and they wound up paying premiums that were hundreds of dollars each month, more than they should have paid. He realized how terrible this whole process is to sign up for Medicare and wanted to do something about it. Another co-founder wrote a book about it, one of the latest books on Medicare. Why am I telling you all this? Because this company is different from the ones that the government is suing. These guys want to be in your corner, want to be your advocate. They are not paying their licensed agents to push certain plans. They are paying them to advocate for you and get you the best plan. And so one of the reasons that we partner with them is because of that. They are not paying their licensed agents to push specific plans like the others are doing. They are there to show you everything and then save you an average of $1,100 a year. So when you call Chapter on the number on your screen, 539-205-2147, they are going to show you a detailed option of all the Medicare plans that are available to you, including which doctors, specialists, prescription drugs, hospitals are covered, what the co-pays cost, and then they'll help you compare that to traditional Medicare. They want to advocate for you and help you get into the right plan. Go and call them or go to their website, askchapter.org/insider, and fill out a short form and they'll reach out to you. Highly rated by the Better Business Bureau, tons of 5-star reviews. One of them is right here in front of me that I can read to you from Michelle S. I can't praise Chapter and Shannon Davis enough. Shannon's knowledge, professionalism, and most importantly, compassion towards me in a very frantic situation was beyond words. Shannon treated me like a family member and was able to keep me calm with minimal tears shed after learning only 3 weeks ago that my biopsy result came back positive for cancer and my current Medicare insurance wasn't going to be accepted at Memorial Sloan Kettering Cancer Center in New York City. So I was devastated, to put it mildly, especially since I just moved here 6 months ago and had to get a new health insurance. That's what happens when you move states. You have to get new Medicare insurance, especially if you're on an Advantage plan. Shannon went above and beyond to find a new insurance plan for me, even though the window period has closed. And I'm thrilled to report that as of April 2025, I was approved for a new insurance plan to begin May 1st, 2025. And with the help of many, I am now scheduled for surgery on May 9th at MSK in New York City. Bottom line, don't hesitate to use Chapter. You will be happy you did. Well, be well, everyone. God bless, Michelle. This is a real testimony from somebody that's used Chapter. I'm telling you, these guys are real. They're the real deal. And if you call them, you'll be talking to actual humans. Call them now today and let them help you find the best Medicare plan. You may have a short window to do that, but they can help you get it done. And if you want to stay on top of everything that's happening, subscribe to our newsletter. Go to our YouTube channel. There's a link in the description. Put in your email address, and we'll get you updated on anything in and out of Congress that would affect your benefits so that you can stop missing out on your retirement benefits. Thank you for joining me today, and I'll see you tomorrow on the next video.